Hello, I'm Laurie Berke. I'm a principal with TABB Group. I have with me here today Paul McKeown, who is Vice President, Market Technology, Global Surveillance, Nasdaq OMX. And we're here to talk about the topic of surveillance and how that component of the industry is changing and evolving and becoming such an important segment of cross-asset, cross-market trading activities today. So Paul, let's talk about the compliance officer. How is the role of the compliance officer changing, and how dramatic is that change over the last couple of years?
It's a great question to open up with, and it's clearly something very close to our hearts. With that in mind, we've recently completed a global customer summit program where we visited a large number of our customers. We visited 5 cities around the world, here in the US, Europe and Asia Pacific, and ended up speaking to probably around 250 of our customers. And I think that gave us a great opportunity to hear firsthand, what the compliance officers telling us about the changing roles that they're seeing in their firms. And I think there's a couple of things that I'd like to mention that are very relevant to this topic. Firstly, compliance officers themselves are being viewed very differently in their own organisations. When you look back over 5 years ago, perhaps, there were more backroom, back office functions. Now they've been thrust into the spotlight and really are working much more collaboratively with the business and the trading side. So they've got a seat at the table. Finally, they've got a seat at the table where businesses are now working with them to really decide when to move into new markets, to set up new products, and they've been closely engaged in those sorts of discussions. The second thing is that the compliance officers now are having to understand the business of trading and having to understand exactly how a product is put together, how it's traded, but most importantly understand how to detect, analyze and really assess abusive trading behavior. And that is a dramatic shift from where they were probably 5 years ago to where they need to be now.
Tremendous role change.
Exactly, and not only have we seen it I guess in the broker-dealer segment, but also in the exchange area as well. A good example of that is we had an exchange out to see us last week looking for a trading engine. And typically that would be staffed by the trading and operations people. And on this particular occasion we had 10 people around the table. 5 were from the trading and operations side, the other 5 were from the market surveillance department. And I think that speaks volumes about the role that they're now playing in the decisions, very, very important decisions that exchanges are taking in terms of how to automate their organisations and how to really approach trading and market surveillance. So as I said, they've got a definite seat at the table now.
Yes, and as both on the sell side with the broker-dealers as well as on the exchange side, as the market is going so global, so interconnected, so cross-asset, whether it's within the trading room or within the exchanges themselves, cross-asset, multi-asset. How is it that a broker-dealer, for example, can now get away from this mindset of, here's the business unit that is U.S. equities, and here's the options desk, and here's the futures desk, and they're running separate surveillance and monitoring capabilities. We know that's no longer acceptable, especially as we have new mandates taking place with reference to the clearing and electronic trading of OTC derivatives. So what are the brokers doing to get a look at all of these different business units and asset classes? We've
had many customers and prospects coming to us and asking for more integrated technology, cross-asset class technology, cross-market technology to help them do and conduct the business of market surveillance more efficiently and more effectively. Clearly this has been driven by the changes in regulation, whether it's Dodd-Frank or whether it's MiFID 2, where if you look at the rules and regulations in there, they're demanding now that the broker-dealer segment have to take a much more integrated view on cross-market and cross-asset class surveillance.
And you've had some different asset classes coming into the fold here, not the traditional financial markets, but some other markets as well, commodity markets and oil and gas markets, that kind of thing?
Exactly, and I think that's just a perfect demonstration of how the world of OTC is now obviously getting pulled into having to take a much more serious view on how to conduct market surveillance and compliance in those markets. Right. I guess a good example would be perhaps in the power and gas markets with an organisation called the Agency for Cooperation of Energy Regulators. Bit of a mouthful, but it's a pan-European regulator for the power and gas markets, now looking to engage and deploy market surveillance technology on a true pan-European basis. And this is a great example of, I think, probably one of the first pan-European projects within the European landscape, and is obviously looking at pulling in all those OTC instruments that previously weren't being regulated.
Right. So there's one group that we haven't talked about. I'm curious to know what's going on with the buy side. Is there any movement at the traditional asset managers or the hedge funds to implement new capabilities in compliance and surveillance? And if so, why?
Well, the answer to that is absolutely yes. I think for the buy side firms out there, being a registered entity by definition means that they have to take a more serious view on how they conduct and approach market surveillance to detect abusive trading behaviour. But also you need to look at the way that their trading behaviour has changed on the buy side as well, as we've seen a much more direct approach to markets, direct access to marketplaces, which by definition means they have to engage in more robust market surveillance technology. So we're seeing a lot of interest from the buy side coming to us and asking about the possibility of deploying more robust technology into that area. And I think that if we all needed a perfect example of why the buy side should take this so seriously, is obviously the SAC case from last week, where a fine of $616 million was handed down to that organisation for insider trading. And I think if we needed a perfect example of why this is becoming so important, then we've got it there, definitely.
A little advertising for the cause. So this is a topic we're going to hear quite a bit more about, I would imagine, over the next couple of years. We hardly have the ink dry on Dodd-Frank and MiFID. We still have some clarification and some timing of implementation of these regulations. So I'm sure this will be something we'll be talking a lot more about on TabbFORUM. Paul, thank you for joining us today. We've been joined today by Paul McKeown, who is VP Market Technology, Nasdaq OMX, in charge of global surveillance. I'm Laurie Berke at TABB Group. Thank you for joining us.